Hi there, welcome to Kneppy Invest and welcome to October 14, 2024. Approximately 45 minutes left of trading today. And overall, today has been pretty good. No complaints from me. Hopefully, you're not complaining either. Only two indices are down. Small caps and tech have had a relatively bad day, particularly when it compared to resources, which is up 1.28%. Okay, the agenda of today's video. We'll go through the ASX today, looking at the best and worst performing sectors, indices, and also companies. I've also have top five stocks of the day. Few other potential top five stocks not quite make it. I'll briefly mention these companies. So a little bit more action on the ASX when it comes to announcements. A few trading updates. In fact, the company that has come in at number one released a negative trading update, and the share price of that company, last time I looked, was down 35%. So I've mentioned this quite a few times. The most powerful type of announcement a company can release is a trading update. If it's positive, it could go up. The share price could go up a fair bit. If it's negative, the share price can absolutely collapse. So I hope that has been proven. My thoughts on that have been proven today with this company, which we'll get to as the top stock of the day. And then if I have any time, I might go through a few of your charts, not your charts, a few of the charts, and maybe a few of your comments, which I haven't had a look at recently. Anyway, so let's get stuck into the ASX today. Before that, is there anything being happening around the world when it comes to the economy or anything like that? And I just had a quick look at trading economics, and nothing much has happened today. China inflation rate hit 3-month low. Wow, 3-month low. Whoopie-doo. China stocks rise on stimulus pledges. So I'm assuming iron ore had a good day. And Singapore GDP grew 4.1% in the third quarter, accelerating from 2.9% growth in the second quarter. There you go. Okay, so let's get to the other thing I just mentioned is capital brief. I actually do like going through this now, particularly just before I start recording the video, just to see what might be moving other companies' share price today. For instance, here we go. Iron ore miners gain as analysis mull China stimulus impacts. South 32 shares climb on rising spot alumina price. REA Group rises and Morgan Stanley sees positive outlook. TPG shares lower on 5.25 billion Veris deal. Gold stocks lead gains on ASX, so gold's had a good day, which could explain why resources had a good day as well. And Seek shares gain on Xref takeover bid, although I did notice that, did see that announcement. And TSMC expected to report 40% jump in third quarter profit from Reuters. And Canva hits 21 million paid subscribers. Lifestyle community shares fall on co-founder departure. I actually did not see that announcement. So that is one of the reasons I go through Capital Brief. And also, Audinate shares rise as it names Chris Rollison as new CFO. Now, I did have a look at the share price, and it didn't rise all that much. So more than likely, that's just a bit of noise, plus maybe this news. I have no idea. Anyway, let's go to the ASX today. Let's have a look at the best and worst performing sectors and indices. Funny enough, Alltech didn't have the bad start today, but around about midday, Xtech deviated from the XGO and XAO. No idea what happened then. Maybe it's just coincidence. Who knows? But before that, all three indices were tracking almost identically until that time. You can see a pretty big departure. In fact, XAO and XGO actually climbed after that, and XTX actually fell. Anything to do with China? Don't know. Could be. Who knows? Well, there's probably some people who do know. Well, there are probably some people out there who have a theory or hypothesis of that, and maybe they're right. Okay, let's get to the sectors. Materials are up pretty big, 1.7%. Healthcare and financials both having a pretty good day. Apart from those three sectors, everything else is down. So it's really one of those really weird days that three sectors have done all the heavy lifting and everything else is down. And because they're up pretty big, that's why the market itself is up today. All the other sectors down, and discretionary and IT have had the worst days. And there's gold up 1.68%. and ASX 20 is up 0.7%. I'd say the main reason behind that is the biggest companies in the ASX 20, materials and financials. So let's have a look at the ASX 20s just to see if that is ringing true today. I would say 15 up, 5 down. There you go. I got it right, finally. And if we have a look at the ASX 20 by market cap, oh, look at that. They're all up. All the big companies are up, and some of these companies are up by over 1%. BHP, CSL, Macquarie, and we have to go all the way down to Woodside, which is down 0.85%. And then we also have, it's interesting. If you look at the best performing companies here, the 10 to 12 best performing companies are the biggest companies. And to see the worst performing companies, you have to go well down the list. And sometimes that will happen. So all you need is the big companies doing really well, and that can lift the whole market. And that is what we're seeing today. Okay, so let's get to the best and worst performing companies on the ASX. And I have not had a look at this yet, so there might be some surprises. And that's not a bad thing. So let's have a look at the top gainers. I know almost certainly what's going to be the top losers, or one of the top losers, but let's have a look at the top gainers. Okay, so by percentage change and pretty big turnover, the first two companies, James Bay Minerals. Now, this is one that has just popped on my radar because when I say just, I mean just within that instant. I don't know anything about this company. Isn't James Bay in Canada? I have a feeling that is in Canada. James Bay. I have no idea it was an English singer-songwriter. There you go. James Bay, Canada. Let's have a look. James Bay, a body of water in Canada. Yeah. Which bay is it? Oh, it's that one, huh? Off the Hudson Bay. Okay, I wouldn't have actually picked that. There you go. We've done some geography lessons today. Oh, not only geography, we've also done some media singing lessons today. That there is actually a singer-songwriter called James Bay. No idea. Anyway, so share price of James Bay Minerals is up 75% today. This company has a fairly small market cap. I would say this is drilling results. Maybe an outside chance of a takeover, or possibly they have acquired some assets. And I would assume their assets are in that James Bay area. Maybe gold, uranium. Let's have a look. James Bay acquisition of the high-grade Independence Gold Project. I'm glad I mentioned that it could be an acquisition of some sort of assets, and this is exactly what it is. And it's called Assets or Gold Project. Where is this project? And the market does like it. It's in Battle Mountain, Nevada. Will they have to change the name to Nevada Minerals? Anyway, this is all about an acquisition. And let's have a look at the chart for James Bay. I'm not going to talk about this acquisition. I have no idea. It could be a really good acquisition. It could be company-making acquisition. Maybe in 5 or 10 years, we'll look back at this day and say, this is the day that James Bay Minerals made it. Well, this was the announcement that transformed James Bay. But more than likely, that's not going to happen. And if you have a look at the chart for James Bay, hasn't been on the ASX too long. According to this, it listed back in 2023. I have heard of this company. I'm not sure why. And the share price had been on a bit of a run before this announcement. Loose lips, yes. And a little bit of selling today. Share price did get as high as 46 cents and now down to 34 cents. And it's understandable why there's been a little bit of selling, because during or near the IPO, that's when the share price did see its high, which was around 60 cents. And share price fell from 60 cents near the high all the way down to 10 cents. So those shareholders who are a bit underwater with the shares in this company saw today as an opportunity to get out at a smaller loss if they decided to sell. Now, the other company at the top or near the top is a company I have held in the past called Xref. One of the reasons I bought this company quite a few years ago was because I did like that they were focusing on profitability. They didn't really care as much about revenue growth, but it was all about profitability. And then that sort of went away. Share price took a massive dive, and that 51% rise in share price is because it looks like they will be taken over by SEEK. So XF1, acquiring, yes, SEEK enters into exclusivity deed with Xref. Now, if I was a shareholder of Xref, and they've also mentioned, the management of Xref said this is, what's how they word it? This is a good thing for shareholders. They didn't say that. They said it. I'm just paraphrasing. This is a good thing for shareholders. And I actually do question that. Is this a good thing for shareholders? You get this nice little pop in one day. But if you do look at the share price or the chart for this company, it's fallen a lot. And I do think this is just an opportunistic takeover for the company. What's that share? XF1. Can't believe I've forgotten already. XF1. I just think this, and I've seen this a lot. Share price takes a massive drop. Looks like share price might be turning around. And you could say might with Xref, and now someone's come in and lobbed an opportunistic bid for the company, and management just said, yes, sure, take this company off our hands. And this is exactly what other companies should be doing. They should be looking for distressed assets that are cheap and trying to buy them, and the management of these companies that are trying to be taken over should say, get lost. You are undervaluing the company. And that's what they should be doing, in my opinion. But, and look at the chart. Share price, when I held this company, share price back in late 2021 went to a high of 80 cents. It fell from 80 cents all the way down to 10 cents. And I think that was definitely the low. Share price did recover a little bit a few months ago. And yeah, I think this is cheap. A good acquisition for, possibly good acquisition for SEEK. But I just wish management would say get lost more in these sort of situations. Instead of saying, what did they say? I forget now. I'm going to actually say what they said. This is in the best interest of shareholders. Something like that. Yeah, that's exactly what they said. After careful consideration of the indicated proposal, the Xref board unanimously determined that it is in the best interest of Xref shareholders to progress the indicated proposal. Anyway, that's all I'm going to talk about when it comes to Xref. And actually, let's have a look at the chart for SEEK, because even SEEK's chart doesn't look that impressive. In fact, this company has really disappointed me over the past few years. And you can just see that with the chart. Share price has done nothing. In fact, let's have a look at the weekly chart. I have a feeling share price has done nothing for about 3 or 4 years. Yeah, this definitely was a company you could take an investment in and think, well, this company is going to grow. But they've made some bad decisions. They did get into China and then they sold that, Xiaopin or something. I thought that was a good move and that didn't work out. And this, when you compare SEEK to REA Group and Car Group, this has probably been the laggard, the disappointing company out of those 3 companies. And they're always bundled. They're always bundled together, those 3 companies. And definitely SEEK has been the worst performing out of the 3. Okay, let's go back to the best performing companies. And otherwise, low turnover. And there's nothing else here. A few companies I've heard about it. A few companies I've looked at before. Keely Resources up 20%. Or DXN. There is a company that has made it into my top 5 stocks of the day. Now, I am a shareholder and fairly low turnover there, but that's okay. I want to discuss that company, so I will later in the video. And by market cap, Orobanda, Gold, Vulcan Energy, Imogen Natura, Metro Mining, Centurious. So quite a few mining companies here. Playside Studios up 10.5%. I don't think that company released anything today, so that I wouldn't say noise, but possibly getting cheap. Notification regarding, no, that was a few days ago. Yes, I did have a look at my watch for the date. I've briefly forgot what date it was. Anyway, there's nothing else here of note. Now let's have a look at the top losers. And I would say there's a 60% chance the top loser will be the company that released that negative trading update. And that company is Web Travel Group, down 34.28%. By far the worst performing company on the ASX today. Markup cap still $1.81 billion. So we'll talk about, or I'll talk about Web Travel Group. Now again, Webjet sort of separated into 2 individual companies, Web Travel Group and another one, I forget, Web Group or something like that. And unfortunately, Web Travel Group, which does consist of the asset I did like, which was WebBeds, released a negative trading update and share price down a fair bit. Other than that, it's fairly boring. Well, I wouldn't say boring, but nothing much of note during or through the rest of the list. But if we have a look at the worst performing companies by market cap, let's see if there's any other interesting companies here. And no. Well, Tabcorp down 5%. BrainChip, it's all over the place. Echo IQ did make my top lists. Was it last week? Let's have a look. Go through my lists. EIQ made it into, or maybe not. Maybe I just talked about it. Oh, October 9, EIQ. October 9, EIQ. Echo IQ. A few people have actually mentioned this company to me, Echo IQ, but down 7%. That's because the share price had rallied a fair bit. So, yeah, nothing much there. Anyway, let's get to the top 5 stocks of the day. And we'll start off with, before we have a look at the top 5 stocks, let's just discuss briefly some of the companies that did not quite make it. And first thing, in fact, the only thing I'll do is have a look at the chart. The first one is TPG. They sold something, some sort of assets, fiber or something, to Vocus. And that's the weekly chart. That's not the weekly chart. I'm almost guaranteed that's NASDAQ. I know my TPG chart, and that was not the chart. There we go. So they sold some sort of assets to Vocus. Initially, the market did like it. You can tell by the red candlestick, the full red candlestick, that there's been selling throughout the day. Share price opened up. This is an interesting chart to me because it looks like the share price is wanting to move into an uptrend, and it's actually broken out from the downtrend. That's the main reason I'm following TPG Telecom's chart a little bit more closely. And if they do release a positive announcement, that could really reinforce any sort of new uptrend that is developing. That is why I did pay a little bit close attention to this sort of announcement. But I might have been a little more keen on open, saw the open and went, ooh, but the share price is now down 3%. And in fact, you can see that just by looking at the 1 minute chart, that the share price probably opened at the high of the day. Yeah, it did. Open at the high of the day and then just continued to fall all through the day. And that is telling a lot, that the enthusiasm lasted like 1 minute and then the enthusiasm was just not there, and more than likely people were selling their shares in TPG Telecom. Okay, a couple of companies, gold companies, released their quarterly activities report, not their cash flow report, because these companies don't have to do that. All mining companies release activities report, but not all companies release their cash flow report. Alkane was one. Alkane Resources. I'm just having a look to see if the share price is breaking out or if the market is responding positively to these announcements. And for Alkane, even though share price is up, the chart looks pretty negative. We have had a bit of a bounce, but share price is still in a downtrend. And the other one was Westgold. So Westgold, you just see two gold companies with significantly different charts. So Westgold is by far the better looking chart. And instead of, remember Alkane had a nice little rally in the last few weeks? Well, Westgold has had a nice little dip the last few weeks. So even though gold chart looks really good and looks more like Westgold, you will see individual companies, gold companies' charts look completely different. And that is definitely true with Alkane versus Westgold. And this could be a nice little interesting buy here with this dip. I'm going to put Westgold as a possible nice little buy. Possible buy. Doesn't mean I will go and buy it, but just a possible buy. Okay, so that's Westgold. I've already talked about SEG and XF1. Treasury Wines. Why did I put this company on my list today? Oh, there was some sort of lawsuit against them, and they settled the lawsuit. Looks like someone wasn't happy with their trading update back in 2020. Okay, yeah. So I've already talked about how powerful trading updates are. They're the most powerful type of announcement. So Treasury Wines reaches in-principle agreement in settle or to settle class action. And this was in regards, if I remember correctly, this was in regards to a trading update or a profit downgrade. So I've mentioned trading updates are the most powerful type of announcement. That's not exactly true. profit upgrade or profit downgrade is, in fact, a more powerful type of announcement, but I sort of lumped those together. This seems like a profit downgrade on the 28th of January 2020, just before COVID-19. So the proceeding was commenced after Treasury Wines revised its earnings guidance on the 28th of January. 2020 includes allegations that Treasury engaged in misleading or deceptive conduct and breached its continuous disclosure obligations, etc., etc. $65 million. Let's have a look at the chart for Treasury Wines back in January 2000. Oh, geez, yes. We can see what happened on that day. On that particular day, the share price of Treasury Wines dropped 26% and just kept on falling because just around the corner was a COVID-19 financial panic. The share price dropped all the way down to $8.50. And just before this negative trading update, the share price wasn't quite to $20, but was near $20. Okay, so they have to continuously disclose how the company is performing, and the chart, nothing here. There's no trend. Nothing for me to get excited when it comes to Treasury Wines. In fact, that's been true for quite a while. There's been brief periods of time when Treasury Wines chart looks positive or negative, but overall, when you look at the longer picture, nothing to get excited. A company I own, Genusplus, has made an acquisition. Genusplus seems like a nice acquisition, no complaints. And this is a nice looking chart. And share price is relatively flat, so up a little bit. Nice acquisition. Nothing to note is the volume. Look at the volume. Always look at the volume. Look at the expanding volume. So if we went back to, say, this time last year, share price of Genusplus was like $1.10. And the volume probably was fairly light back then. Not probably, it was fairly light back then. This wouldn't have been on the radar of many investors. And now, much higher volume. Institutions getting interested in the company. The financials behind the company are looking pretty good as well. And that's why the share price has rallied from $1.10 up to $2.63. So this has been a great investment for anyone who has been in this company over the past year. I took a trading position in February at $1.39, and I'm not complaining. In fact, I took a trading position in this company even before that, sometime last year, and then I took profits, and then I bought. And one of the reasons I sold, funnily enough, one of the reasons I sold Genusplus when I was trading it like mid last year was because of the lack of liquidity. And I think that problem has changed. In fact, let's see how much volume we're seeing. Got the summary section. I can see plenty of buyers, plenty of sellers. Have a look at the trade history. And no problems, I think, with liquidity right now. Maybe some days fairly low, but even those days, you're still getting a fair bit of dollar turnover. By the way, definitely, if you go back a year ago, this time last year, this is a perfect illustration of how liquidity can improve for a company that is hitting it out the park when it comes to financials. Genusplus is one of those occasions. So when you do hear the experts say, don't buy this company because there is a lack of liquidity, this is what can happen. The benefits of what can happen when you buy a company that has a lack of liquidity. The share price can rally a fair bit and liquidity improves. So this time last year, there were some days where almost no shares were traded. That is not the case right now with Genusplus. One of the reasons behind this, possible reasons, is this company is now on the radar of many individual investors, but also institutions. And one of the good things about the liquidity increasing, institutions can now take a position in Genusplus. Anyway, so this is an example of liquidity increasing through time that can be very beneficial for individual investors like you and me. And finally, we have LIC, which I think someone resigned or something. Who resigned? Someone resigned. Someone big resigned, like the managing director or founder or something like that. And share price not down as much. Our co-founder and managing director, James Kelly, to retire. Now, just retire. I did hear some chatter that this is a sign there's something bad coming around the corner. Not necessarily. Maybe he's really old and he just wants to, spend time with his family, quality time with his family. That's what they always say, isn't it? I want to spend more quality time with my family. More than likely, they just want to spend more time golfing or something like that. It's not necessarily a bad sign. So let's have a look at a chart for lifestyle communities. And this is where you get the bad sign. Now, the share price has rallied a fair bit from 750 back up to 915. That does not mean that the trend has changed. I like to see a little bit further proof. And maybe you could say there's some value with lifestyle communities. I'm not sure about that. Okay, so let's get to the top 5 stocks of the day. And coming in at number 5, and I don't think the share price has moved, a company called Veris Limited. Now, the whole reason I put this into my top 5 is because they released a trading update. Yay, I love trading updates. We can see how companies are performing, how they are, they're moving. Are they trading or performing to expectations, or are they exceeding expectations? Those are the ones I like. Anyway, you can probably tell by the lack of share price movement that the market just didn't care. And maybe the management is a little bit surprised because they were the language they did use when I did read this, well, not when I read it, but the language they did use was a little bit more bullish. Maybe they were expecting the share price to go on a run or the market to take notice. For instance, for quarter 1, financial year 25 trading update, improved financial performance underpinned by digital strategy execution and financial year 24 restructuring initiatives. Veris demonstrates improved profitability. They also mentioned in this first bullet point, demonstrates a strong rebound from the 1.8 million underlying loss before tax for financial year. Turnaround, they talked about turnaround. So they were quite positive in this. Profit before tax margin of 2.3%, significantly higher than previous periods, etc., etc., and anticipates further financial improvement throughout the remainder of financial year 25. So they're speaking, I wouldn't say they're speaking the truth, but they're speaking with a tone that things are moving in the right direction for this company. Now, you might say, that's just management being management. But sometimes you will say when a management doesn't think the future is going to be nice to the company, they won't be like this. They will be more guarded. So this could be the fact that the management actually are fairly confident about the next year. Now, they did provide a table here, and the table was a little bit illuminating to me. So mentioned here, Veris delivered a strong turnaround in operating performance. Now, the thing I like about this is they did compare this quarter to the previous corresponding period. Now, a lot of this rebounding was looking at this period compared to the whole financial year. So they're not looking at apples or not comparing apples to apples. They're comparing, really, in a way, apples to oranges, something completely different. But when you do compare the first quarter of this year to the first quarter of last year, there was a slight improvement, but nothing that substantial. For instance, revenue was actually down a little bit. EBIT margin up a little bit from 2.5% to 2.9%. Profit before tax up slightly from 0.5 to 0.6. And profit before tax margin actually increased a slight amount. So it wasn't significant. It wasn't what was they called it? It wasn't a substantial improvement or significant improvement. So what they did to use that sort of language is compare the first quarter to the financial year. Now, they can't do that when it comes to revenue because if you do that, revenue dropped from 93 million to 24.3 million. So they just focused on margins, and margins did increase. Yes, I'll give them that. But I do prefer a company just to focus, or when I do look at these sort of things, a trading update or trading results or even financial results, I want to compare to the previous corresponding period. And that's the reason I do that is I want to eliminate any sort of seasonality. We don't know. I don't know if Veris has seasonality, and that's why these first 2 quarters and these 2 financial years were pretty good compared to the rest of the financial year. Maybe this company always performs better in the first quarter. I just don't know. I don't know the company great enough for that. And to be honest with you, the market has just ignored it. In fact, there's been one trade, and that trade would have been on open. That's it. One trade on open. Someone liked it, and they thought, buy some shares, and nothing since. That tells me the market just doesn't care about this particular trading update, and maybe it doesn't belong in the top 5 stocks, but it's a trading update, and I do like it. Do like trading updates. And the chart for Veris, okay. Now, this time last year, the share price of Veris was significantly higher. So this time last year, the share price of Veris was about 8 cents. Now it's 4.9 cents. So in fact, you're probably buying this company at much better value than a year ago. And since this particular quarter was better than last year's quarter, first quarter, then you're probably getting more of a bargain. Whether it's a real bargain remains to be seen. If we have a look at the weekly chart for Veris, yeah, this sort of chart is screaming low quality, run for the hills, low quality, only a trading company. In fact, the share price is closer to the lows, all-time lows, than the all-time highs. The all-time high for this company was almost 40 cents back in 2016. There you go. Anyway, Veris, a company I have very rarely looked at. I couldn't even tell you what they do. Industrials, commercial. Let's have a look what they do. What does this company do? Engineering or something? They're talking about data and digital data and something like that. Fully integrated digital and spatial data advisory and consulting firm, provides end-to-end spatial data and digital solutions to tier 1 clients in key industry sectors, including transport, buildings and property, energy and resources, etc., etc. It looks like they're Australian-based. Okay. Interesting. But I never had a look at it, and I think one of the reasons I've never had a look is because their financials are just, nah. Anyway, and the charts have never looked interesting as well. Okay, so probably spent way too much time on Veris. Let's have a look at a company coming in number 4, Clarity Pharmaceuticals. Interesting enough, in Capital Brief, there was a little mention. There it goes. Clarity Pharma shares lift on clinical trial and new CEO. In fact, the share price did rise fairly substantial, but share price is now down. This is what happens when there's a little bit of negative sentiment in the market around a company. When the share price rallies, you will see a little bit of sell-off, or you could see a sell-off. And that is exactly what's happened to Clarity Pharmaceuticals. So when I came up with my top 5, I was hoping the share price of this company would be a little bit higher than this. But this is a good good example of sometimes a positive announcement. You might consider an announcement to be positive at the start of the day, but by the end of the day, it doesn't seem as positive. This is definitely the case of that. So Michelle Parker promoted to CEO. Look, I don't know this company back to front. I don't know anything about Michelle Parker. Maybe she's the right person to lead this company forward. Positive guidance from the US FDA on phase 3 trial. Now, it sounds positive because it's got the word positive in there. I actually had a quick look at this, and it's not the sort of announcement that would be a trigger for me to buy any shares in a company. So if I didn't know Clarity any at all, and I saw this announcement, I wouldn't be going, wow, this is the announcement. So it's not one of those sort of announcements, but I suppose it is positive. And so the share price did rally on open, and then the share price has dropped away. So let's have a look at the chart for Clarity. And you can just see the effects of what can happen if that sentiment, particularly the short-term sentiment, has turned a little bit ugly, a little bit negative. And the share price of Clarity has dropped over the past few weeks from about $9 back down to $7. So we do have some shareholders who bought at high prices now thinking, oh, have I made a mistake and I need to get out? And when they see the share price rallying on open today, they think, oh, this is my opportunity. I can get out now at a smaller loss. And I think that's what's happened today for Clarity. In fact, their one-day candlestick is back to where it started, which we knew already. But the one-day candlestick does look a little bit bearish. So let's have a look at the 1-minute chart for Clarity. And there it is. Gee, on open. Massive volume coming in. Share price went to a high of about 745. So at one point, in fact, let's go to summary. So it closed the other day at 697, went to a high of 747, which means at one point, not quite a 10% rise, but 50, so probably 7 to 8% rise in share price when you do compare yesterday's close or the previous trading day's close to the high of the day. And then the share price has pulled all the way back. And you can see that just with the chart. And the pullback was quite quick. And the share price got back down to where it was on Friday at around about 11:30. Actually, even before that, at about 1 hour. It took 1 hour for the share price to go from the high of the day back to where it was the previous trading day. In fact, it dropped all the way down to 685, and we have seen the share price now calm down. I think we are at a support level just by looking at this 1-minute chart. around 685. We'll say 680 to 695 or $7 is a support zone for this company. Just looking at this 1 minute chart. Anyway, so that's a good example of a positive announcement. Doesn't necessarily mean the share price will take off. And you also have to look at how positive it is. And this is not the sort of announcement that would trigger me to even think about taking a position in a company, even though I do own Clarity, by the way. Okay, coming in number 3, we have a company that did release their Appendix 5B. And Appendix 5B is a cash flow statement. That company is Pantoro, which is a gold company. Now, this company has a market cap of $800 million. Now, if this company had a market cap of $200 million, I would be owning some shares in this company right now. I could tell you almost that for a fact. For a fact, because I had a look at this particular company, I think it was last quarter, and then again this quarter I went, ooh, doesn't look half bad. And then I had a look at the market cap and went, oh, okay. Anyway, so let's have a look at this company's Appendix 5B, and then I'll show you the cash receipts history for this company. So Call Activities, Appendix 5B, Cash Flow Report. If you've never seen these before, sometimes they separate the announcement into 2 separate documents, like a Call Activities and also Appendix 5B. I actually do prefer that because I only like to look at the cash flow report. But if Pantoro decided to combine the 2 particular documents into the one, and that means I need to scroll down, and I'm just being a little bit lazy. So you have to scroll all the way down to page 15 to get to where I want to be. And that is numbers. How is this company performing? Now, sometimes I will go back to commentary and then go through the commentary. I did not do that for Pantoro with this quarter report, although just looking at it now, EBITDA of $32.5 million during the quarter. Cash and gold balance increases of $8.5 million were achieved during the quarter, which doesn't seem a lot for a company with a market cap of $800 million. Yeah, I thought that might be that either a little bit higher or the market cap a little bit lower. Okay, so let's go back to the cash flow. And I still remember, because last quarter they had a pretty good quarter. This quarter is pretty good when you look at these numbers. So receipts, $77.7 million. Operating cash flow positive, $26.8 million. I went, ooh, this looks pretty good. So 2 quarters, good quarters in a row for Pantoro. Did spend $12.7 million on mine capital development. $3.4 million on property, plant, and equipment or capital expenditure, $1.3 million on exploration and valuation. So they did spend a fair bit of money. So the cash on hand did not increase all that much, and they already mentioned that. And anything else here? Oh, they spent also $3.5 million on ROU lease payments excluding interest, which could be an ongoing cost. But they do now have over $100 million of cash on hand. So the enterprise value of this company is more like $700 million, although do they have debt? Which one thing I didn't look at. They have a little bit of debt, $18.1 million of debt. So that means the enterprise value is a little bit higher by $18.1 million. Okay, I've already mentioned I'll show you the cash receipts history of this company. Here it is, my little spreadsheet that I do this time of year. So Pantoro's cash receipts from when I first started this exercise with this company back in the December quarter 2017, cash receipts did nothing, sideways, for about 4 years, maybe even 5 years. Yeah, 5 years. And then cash receipts started to grow about 1.5 years ago, and they've gone from 27 million to 78 million. And cash receipts now sort of the same they were as last quarter. So obviously this company either acquired another project, which they were mining gold, or they've built up a new project, or they've ramped up the production in a current project. So a nice build up in cash receipts over the past few years. And when I had a look at this company many, many years ago, they were not operating cash flow positive, and now they are. So the company is moving in the right direction. Maybe a question for you is valuation, but the chart looks pretty good. I do like the chart for Pantoro. Not the 1 minute chart, if I thought this company was 200 million, I would be all in. Those financial numbers and this chart, that's screaming good times ahead. Now, the share price is in an uptrend. Share price did get above 10 cents a few months ago, 13th of August, 2 months ago, and has stayed above 10 cents. So it's broken above that resistance level. And now it's just, gradually going higher at 12 cents. So not much increase in the last 2 months since it broke above 10 cents. Looks like the shift in sentiment was around about March this year. I would have been much more excited in this company at about 6 cents, and share price has doubled since then. In fact, this time last year, uh, they must have released a pretty negative Appendix 5B, because on the 30th of October, share price dropped 25%, down to 3 cents. So a really good recovery in the share price from 3 cents to 12 cents in the past year. It's a nice little fallbagger. Done well, Pantoro. Done well. Okay, that's Pantoro coming in at number, what was it, 3. Coming in at number 2, we have DXN. Okay, I'm a little bit biased with this company. Share price up 10.4%. We are now at 4 p.m., so we're in the closing auction. Nice little rally. A surprising rally, in fact. I did not expect this, because the company did a capital raising. So sometimes when you see the share price rally on a capital raising, the market likes it. There's something to like. So DXN secures 6.5 million placement and restructure of pure debt. The capital raising was done at 7 cents, so a little bit of discount from where the share price was on Friday, 7.7. So it's a 10% discount. Now, someone did sell the shares on open at 7.5 cents. There it is. Someone sold on open at 7.5 cents. So shares in this company weren't trading on open. There was a little bit of delay there, because they did release that announcement, the capital raising announcement, at about 9:55. So there was a little bit of delay. But someone decided they saw enough. They needed to get out on open, and they sold at 7.5 cents. And that was the low of the day. And then we just saw the share price just gradually rise. Got to about 9 cents, a little bit of pullback towards the close, but that's okay. And yeah, so nice little present surprise. So I can understand why someone might want to sell on open. It's a discount. 7.5 cents is not a nice little level, and they're probably kicking themselves right now. But the main thing, I actually did watch this when it did open, and I saw there was no enthusiasm from the sellers at all. It was just one seller. This was one seller, just one seller had to get out. And when I don't see enthusiasm from the sellers in this sort of announcement, and then you start to see the share price just gradually lift, that's a good sign moving forward for DXN. Now, probably the problem with DXN, I actually have not even had a look at the 2 announcements they did release. I'm going to have a look at the investor presentation when I have a little bit more time. Maybe there was something in that excited the people. I don't know. So let's have a look at the chart for DXN. And this is a good-looking chart. And we're seeing what I like to see since about May. Increase in volume. Definitely increase in volume. The share price is trying to move into an uptrend. Share price tried to get it above 10 cents back in the middle of September. It failed, pulled back, and I think that's the next level I want to see broken, 10 cents. So I'm looking for a breakout above 10 cents within the next few months, hopefully. And hopefully they release a pretty good Appendix 4C as well. The most recent Appendix 4C they did release was pretty good, if I remember correctly. I could be wrong. I'm pretty sure it was pretty good. Anyway, so that's DXN coming in at number 2. Coming in number 1, we have Web Travel. What's the other company called? Web. Is it? No. It says Web Travel, and that's it. I forget the ticker for the other one. It's like 90 cents or something. So share price of Web Travel down 34.57%. Now we're in the closing auction. The indicative price is $4.37. So it's an extra 5% lower. Now, whether it stays at $4.37 or there's a bit of shenanigans happening in the closing auction, which is possible. Now, in saying that, the low of the day is very close to where the share price closed. That's negative. We just saw constant selling during the day. So wouldn't be surprised to see the share price officially close at the low of the day. If you have a look at the buyers and sellers, there's a lot of selling, a lot of sell bids put in below 420 even. Look at that, 9 at $4.20. And I'm not sure if any or many of those are going to be pulled. Maybe 1 or 2 will be pulled, but there's a lot. And there's not much enthusiasm for the buyers at all. No big buys in. A few, but no big ones. So this is going to be interesting to see where the share price actually does close. I do like this. I do find the manipulation going in during the closing and opening auctions to be really fascinating. People are trying to manipulate the share price, and all they need to do is, and you just see bids pulled and then put back in, pulled and pulled back in, trying to manipulate the closing share price. And I suppose it's legal, but anyway, why is web travel in this list of worst performing companies? Actually, no. Probably the most important question is why is the share price down 34.57%? Well, the company did release the most powerful type of announcement. So I've already mentioned it's a trading update, but more importantly, even though you can't see in the title of the announcement, first half preliminary results update, this is a downgrade. This is a downgrade. Now, I'm pretty sure it's a downgrade in margins. In fact, so total transaction value up significantly, up 26%, bookings up 22%. So this is web beds. So straight away you might be thinking, oh, that's pretty good. But they mention here, as noted during the AGM, margins have been impacted by the collapse of the FTI group, not sure why, the Paris Olympics, not sure why, and the European Football Championships. Are they making excuses? I don't know. Subsequent to the AGM update. Okay, so that's fairly important. That means things have happened since they last updated the market. European margins remain subdued. Oh, this does not sound good. And overall margins were further impacted by customer financial incentive agreements, overrides in place, which are under review. As a result, first half 25 preliminary revenue margins are now expected to be 6.4%, down from 7% as indicated at the AGM. So this is a downgrade. So it's not necessarily technically a profit downgrade, but this will affect the profit. So when you see margins going down from 7% to 6.4%, that will have a significant impact on profits. Whether it's a 35% impact, don't know. By the way, we're near the closing auction. Yeah, there we go. So 453. Yeah, so some of those sell bids were pulled. I think without doubt they were pulled. I don't think there will be many buy bids that will put in, but some of the sell bids were pulled, trying to force more sellers to come in. Anyway, so down 36% officially, and the share price did close at the low of the day. So very negative for Web Travel Group. This is a trading profit downgrade. Now margins, it's only about margins, but so we already know that TTV revenue margins 6.4%, a downgrade. Webbeds preliminary underlying EBITDA margins are expected to be 44%, reflecting the lower revenue and operating expenses being up 15%, and second half expenses are expected to be in line with first half. Now, Webbeds remain committed to its $10 billion TTV by financial year 30 and 50% EBITDA margin targets. Okay, so I do like that sort of goal from management. So this is, what was it, 6-year goal? I do like it. And if they can achieve those goals, this company will be significantly bigger than where they are now. And this could be just a hiccup, and possibly, just possibly, the market is overreacting. But the market doesn't like these sort of announcements. They don't like announcements where things are not going as well as expected. So that's why the share price is down. And let's have a look at the chart for Web Beds. Well, they should be called Web Beds. Web Travel. And yeah, an ugly looking chart. In fact, before this particular announcement, the share price had moved into a downtrend. Was in a downtrend, and this sort of confirmed the downtrend. So if you're just trading this, you'd probably be out. So this is also another reason why technical analysis can save your capital. You would have been out. You would not be trading this at all. You would have been out without doubt. So this is more proof to me that technical analysis can save your bacon. Now the share price at 460 is at an interesting level. Let's go to the weekly chart. It's at a nice little, get rid of that line. The share price is at the lows this company saw back in 2022. So it's not that long, but it's still at a support level, which goes all the way back to 2020. Yeah, I don't mind where the share price is right now. I'm gonna put this onto my watch list. Anyway, Still well off the COVID-19 lows, but don't forget this company did demerge. They spun out, they spun out their B2B business, I think. Anyway, that's what's it called? Web Travel Group, down 36% today. Now, we're 50 minutes into this particular video, and I was going to show you some charts or talk about some of your comments, answer some of your comments, but this video has gone on long enough. So I'm going to end it here for today. But if you do want some things answered, some questions or some comments, leave your thoughts in the comment section of this video. Otherwise, I'm not a travel, like I say, I'm not a travel agent. I am not, whatever I say, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.